So the media begins to talk about this low VIX, and we're definitely having low VIX. It's not much different than what we've been having, but it crossed below 10. One of the things that I want to talk about though today is how to trade this market. There are two different ways I've found. Here is a market move that occurred last Friday, May the 5th, and this is my offline server. I'll show you the online server in a minute. And here it is in the Nasdaq on May the 5th, as well as the E-mini S&P. So this weekend, this is a strategy I developed over the weekend. None of my strategies captured this move. It looks like a bigger move than it is because the chop is so narrow. It's so straight line. It almost looks like a 20 or 30 point move on the chart, but it's really only from this point to that point, only about 12 points. The day session closed at 23.97.75. The 24-hour session closed at 23.99. Very quiet move. It's as if the markets will only go up if it can go up quietly and not trigger any signals. And so we almost have to trade based on a sell signal. And so here, this new strategy that I have trades in the afternoon. If the market is, there's certain parameters to this market, and I won't tell you all the details, but it's almost more like a sell signal, or definitely not a traditional buy signal. And so typically buy signals, these days the market will move really slowly, and then if there's a buy signal generated, it kind of stops. And that's just the nature of the low VIX environment. And we haven't been this low except two other times. And so I'll show you more about the VIX and the online server in a minute. But I'm going to show you the performance report for this strategy. I told you there's two ways. This is one way to trade this, is to use a strategy like this that uses more of a sell signal within reason. We're not going to set it up so that we one of the rules is that we trade it in a low VIX environment. So we don't want to take something that's in a high VIX environment and take sell signals and turn them into buy signals. But this is not a sell signal I've used before. It's for the sole purpose of capturing an extremely low VIX market environment. You heard the saying, don't short a dull market. So if the market is dull, maybe you can buy a sell signal. And here it is, the last 3 years. From this point, it does really well. Let's look at the performance stats. This is the E-mini S&P, and 2350 max drawdown, 50.95 average trade profit, and this number is higher more recently. As you can see, the equity curve is kind of sideways in here, and then it moves higher. That would indicate that the average trade profit is higher in this region. Now let's look at the Nasdaq. This is going back 3 years as well. The average trade profit 53, and the drawdown 34.85. And here's the equity curve as we have looked at previously. And I'm going to show you this on the online server, the most recent trades, because I have an offline server, online server. I develop offline during the market, and then have an online server for automation. So I'll show you that, and I'm going to move that server over here into this window. So here are the trades on the online server. I have some trades in soybeans going in the portfolio. You can see that there at the top of the window. Some soybeans trades. Soybeans day trader 3 and soybean swing is long. But here is the strategy that I told you about. This is Monday's trade. Small profit in the E-mini S&P, and the Nasdaq caught this move on Monday. So this is not implemented anywhere. It's a new strategy, but the strategy that I developed over the weekend to catch those trades you saw in the previous window, here is what they did on Monday. And this only trades in the afternoon, so it has not traded yet today. And so again, we're in a quiet market with all-time VIX lows, and so this is a nice pop. Would have been nice to have kept this overnight. I've already researched holding this overnight, and since July of last year it works well, but not the last few years. And so I prefer to keep it safe and close it at the end of the day. But it's a new strategy that I will have out on my website, and you can adjust that on your end if you want, and you hold those for pops overnight. And I'm going to show you the VIX. So here is the Vix Monthly for the data that we have in TradeStation on the $VIX.X, the cash. I'm not talking about the VIX futures, we're talking about the cash. This goes back to 1990, and we've had 2 months. Here is a low of 889. Here is a low of 939, and today our low is 956. So 956, almost at the second lowest low. There's two lower lows on the monthly lows, our overall lows since 1990. And one of the ideas is that the catalyst for this market to sell off will be when the VIX makes a new all-time low. There could be a coordinated effort of profit taking when it hits that bullish level of all-time lows in the VIX. Alright, I told you there were two ways to adjust your strategies to capture these moves. And the first way was the new strategy that I showed you, taking sell signals in low VIX environments to get the pullback. And the other way is to bias your strategy. I told you that none of my strategies caught this move on Friday. And so what I've done is I've adjusted tick pulse to make the L1 value, it's hard to pull this back here, to make the L1 value 20 for the long trades, and so it calculates quicker. And so L1 is 20, and I turn the short signal off, and I'm going to show you how I did that. So under format strategies, you can double click on this, or you can expand this window out, and you can see sell short is set to off. It's also one of the inputs. So take long trades true, take short trades true. You could also set that to false, either or both, to turn off short trades. And then L1 long is 20. I experimented with 40 on the L1 short, and it's typically 30. The default is 30 for both of these, but I've turned the shorts off so it doesn't matter. And I made the L1 20, so you could reduce the requirement so that it takes long signals more quickly. And that's another way to do it. I'm going to show you the results of that. So the last 6 weeks, these are results with $25 round turn slippage and commission. This would be $66 if the slippage and commission were not included, but it is. And so this is tick pulse the last 6 weeks with this low VIX. Now this bias is something you want to do in a very low VIX environment, if you do it at all. Here is the performance graph. So, you know, it's hard. You're not going to kill. You're not going to kill the markets typically when the markets aren't moving. If it's low VIX and the markets aren't moving, and you have a momentum strategy like tick pulse, it's just impossible to kill the markets and make great trades. You can do much better buying the dips. So this is one way to do it, though, is to bias your strategy. So there's two ways. One is the strategy that I showed you, take sell signals in low VIX environments. Number two is to bias your strategy to take long trades more quickly and take the shorts and turn them off. And so those are some adjustments that you can make on your end on these strategies, or you can lease this new strategy that I've developed in this low VIX environment.